Hey, yeah, what? Grab your bootstraps, yeah, let's scale your growth. Here's the truth, Jack. We'll reach the globe, unveil the notes.
What the fuck?
Earn your digits, won't burn, you'll get it. See, this is factual. Funds will show, learn to flow with Candid Capital.
This is a Candid Capital interview. In these episodes, we host industry business professionals involved in the global tech ecosystem to discuss various topics related to tech, global economy, and building sustainable businesses and investments. In this episode, we're looking at the infrastructure powering the next phase of digital finance with Didier Lavallée, CEO of Tetra Digital Group, a leader in regulated custody for digital assets, and is now taking the next leap forward into building a Canadian-backed stablecoin. Didier, thanks for coming.
Thanks for having me.
Yeah, it's great. We've been going back and forth trying to get a good time to get this done, but it's really exciting that somebody in Canada has been able to complete a sizable round specifically for stablecoins, and so this is amazing to have you on. But before we get into all of that, I kind of like to start with the origin story. What brought you into tech, and more specifically, how did you end up in digital asset space?
Yeah, thanks for having me. Good question. Most people would know I'm a traditional market infrastructure person. So I worked about 12 years in equities on trading desks, also some public equity research and trading, sales, learning about companies, learning about market dynamics. And then, like most career, there came a point where I was looking to transition and do something else. I was lucky enough to find sponsorship in the large bank I worked in, and they allowed me, enabled me to transfer to a new division where I started touching a lot of different components of those businesses, which included foreign exchange. I eventually led to foreign exchange systems and eventually had a custody product. So I think I got into the custody game more than the Web3 game, if I can be completely transparent. And then looking at traditional custody, how it's done, the various pieces of the infrastructure, the services that matter. And then Web3 became a natural extension of that. I had always been Web3 curious. I had been, invested in the space since 2017, just, as a public market investor and a participant. Bitcoin resonated, the technology resonated, but really it's almost kind of an accident that I blended into Web3. It came more via the custody and the market infrastructure, which I think is very fundamental to the Tetra story, because ultimately we are an infrastructure and, believe in the financial services operating framework and how this technology can essentially change and help modernize financial services.
So for someone who doesn't know what Tetra Trust is, maybe if you can just kind of run us through kind of what it is, or where you started and where it is today, because I understand you've launched a new website and some new entities regarding it.
Yeah, of course. So the inception story of Tetra Trust is essentially the failure of Quadriga CX. So for people familiar with that event, there was a platform that operated in Canada. And in 2018, the founder and owner of the platform left with about 200 million worth of crypto that belonged to the retail users of the platform. Quadriga is really, I would say, the inception story of Tetra, but also of the entire regulatory framework that you have in Canada that is mostly driven, by the Securities Commission and based on consumer protection. And that aspect of consumer protection came because of that large failure, and it's a failure that's well known globally. At that time, the founders of Tetra essentially said, well, we're going to need professional third-party custodians in the market to service institutional platforms. So if you're buying your crypto on a regulated trading platform or through Wealthsimple as an example, it's important for people to know that there's trusted third parties that are doing the custody of the crypto. And that's really the inception story of Tetra. So Tetra primarily started off as a custodian of crypto. So what does that mean? We're essentially like a digital vault where we are protecting crypto for institutions. We're B2B business, so we only work for institutions and business. And that's really the beginning of Tetra. Now, over the years, Tetra has developed a lot of expertise in digital asset institutional infrastructure, which culminating to us launching two businesses this year. One being the Unity software, which is our own software tool that we've developed over the last 4 years, and the announcement of our stablecoin partner project with our partners, including Wealthsimple, Purpose, ShakePay, National Bank, Shopify, and ATB.
So if you are buying one of those ETFs from like Wealthsimple or somebody else on that, there's someone like you that's doing the custody for them, or are they doing it themselves?
No, that's correct. So there's somebody like Tetra that is a fully regulated financial service entity that's securing the crypto. This way, investors can have full confidence that there's one, no commingling of their assets with the platform's assets, and two, that there's a firm that's properly governed and regulated that's overseeing the digital assets.
Do you also provide that service or a similar service for companies trying to do a crypto treasury strategy as well?
Yeah, correct. So if you look at the digital asset treasury plays, whether it be in Canada or the US, most of them would be working with qualified custodians in the back to secure essentially, whether it be Bitcoin or the Ethereum they're keeping on their books or Solana. So they all work with qualified custodians, and those would be part of the public filing, specifically for the publicly traded one. You could go look and essentially find who their custodians are.
Okay. And are you guys international or just primarily Canada?
Yeah, so our license is granted in Canada, so we are primarily Canadian. We do have, a small amount of, I would qualify them as family offices, ultra high net worth, that come to Canada to custody their crypto because they, believe that Canada is a safe market where with proper, financial regulations, where it's a good place to store, and those individuals are mostly in the U.S. But yes, we are currently focused on Canada from a custody perspective. On our software side, that platform is global. So while we are launching in Canada and working through all our various partners and go-to-market strategy, and expansion outside of Canada will be fundamental and strategic for us. And then stablecoin's all about distribution, right? So of course we announced distributors. We talked a lot about the stablecoin being business to business, a payment vehicle, settlement vehicle, and ultimately we see a successful stablecoin requiring, or Canadian stablecoin requiring international adoption as well, right? So there's the domestic market, but there's also all the transactional market that's happening overseas that you want to tap into.
So for your stable coin that you're working on, is your thought process behind it mostly for external, like international transactions, or do you see there's a reason to have a Canadian stablecoin for domestic purposes?
Yeah, so I certainly think that there's an incredible opportunity on the domestic side. Again, being a traditional market infrastructure player, there's a lot of things that stablecoin rails can deliver. I don't see them as replacing traditional payment rails, specifically not when real-time rails are going to be available. I see them more as complementary. So, for example, 1 in 5 Canadians sends money abroad, right? So the remittance market's an important market. Now, that's still, to me, a Canadian market to some extent, but it has global reach. Settlement cycles are always tied to banking hours, right? Which means, you have cutoffs during the day, you don't do overnight, you don't do weekends, you don't do holidays. So stablecoin technology can really help. It's faster, it's cheaper. But ultimately, what we are seeing as use cases that are emerging for our partners and institutions is it's programmatic, which means that you can actually lay into code your treasury movement. You can start fully automating your treasury function. And that becomes very interesting, not just, for international transfers, but also for, kind of domestic efficiency and the efficiency of your treasury.
So maybe just for those that are not familiar with this stuff, but have heard about the stable coins and heard programmatic, like what does that mean to a user or consumer of stable coins? Like an example, maybe.
Yeah, I mean, I think the first premise of a stable coin is, it's a digital dollar, right? Now our stable coin is 1-for-1 backed with Canadian dollars, which means that, users will give us a Canadian dollar and we will issue a stablecoin token, so a digital representation of that dollar. That dollar is able to be transacted essentially on blockchain technology. And the premise there is you can essentially send that dollar anywhere in the world with limited friction, right? Limited costs and limited time. So that's the massive unlock. But the reality of that is users need to be pretty comfortable with digital asset as a construct. You need to have a wallet. You need to understand how that works. There's still limited point of sale opportunities in digital assets currently, which means that, it's hard to pay with crypto. There's a few platforms that are doing it, which is why our focus continues to remain on the business to business segment currently. And we'll give an example of some of our partners because they've announced some projects. So, Shopify announced that they're building heavily on stable coins. They've announced some partnerships recently. They want to give the opportunities to their network. So whether it be the businesses that are selling on Shopify, the people that are buying on Shopify, or even the business to business segments that they have within their ecosystem to transact on stablecoin rails if they want. So if you're a business, let's say in Canada, and you're selling goods in Mexico, or you're maybe getting goods fabricated in Asia and you need to go pay your suppliers, you can now do so on Shopify using stablecoins. And it's not just Shopify, it's the Visas, it's the MasterCards, it's Stripe through their acquisition of Bridge. So the movement of money globally is moving heavily digital because the friction in the traditional way of exchanging capital in different markets. And that's creating a lot of value for businesses, but ultimately end users, because if you can remove cost in terms of moving the capital around, eventually the end user benefits.
So I guess in the budget, there was some mention of stable coins and a couple changes to, the direction we might go with our finance system in terms of fintech or DeFi and TradFi. How do you think it's going to resonate, or not resonate, but how do you think it's going to work here versus some of our, I guess, competing markets? So, for example, the US seems to be kind of a free-for-all. Europe seems to be, you pretty much need to be a bank. So do you think we're leaning one way or the other, or do you think it's going to be something different?
Yeah. I think it's important, and we've been signaling this to the government, Minister of Finance, Bank of Canada. It's important that we put a framework that's Canadian, right? It's great to look at, let's say what Genius is doing in the US, Genius Act, or what Mika is doing in Europe. But ultimately, we need something that serves the Canadian market and the Canadian companies and users. So we're big proponents of making sure that our act is focused on Canada and also focused on, because we've learned from Mika and Singapore and some of the other markets, Dubai, US, take the good and leave the bad out, right? So I think I would agree with your representation that the US is a little bit of a free-for-all right now in terms of stablecoin issuance. I think currently the way the Act in Canada is structured is, you're going to have a pretty high bar for people that want to become issuers, including having to come in can register as an issuer of the Bank of Canada. And, you're also going to have a framework that's going to be ensuring that entities are properly governed and, they have the right oversight to be an issuer. So users can feel fully confident that they're protected when they're using the token, and it's a valid token. So I would say we're hoping that Canada kind of takes the great of all systems that are currently available or frameworks that are available internationally, and that we make it our own. And I would commend the speed at which the Minister of Finance has moved on this. 3, 4, 5 months ago, we were kind of nowhere. We now have something that bridges us closer to the rest of the G7 and G20 markets. There's still a lot of work left to do, but I think, we've been very happy with the speed at which government's moving on this file.
Yeah, I mean, I think we kind of had to move. I think there was a little bit less choice in that just because, Canada is not the leader of all global markets. But I guess my question would be, because you have a lot of these conversations and you're also a bit international as well, if you could wave the magic wand as to what we need today, what would be your wish list?
I think the biggest one for the industry generally would be to make the CSA framework go away. So the Canadian Securities Association has had a framework that's based on securities law for stablecoin. They've now issued a prospectus to a company, and I think that's a mistake. That's a mistake for various ways, but it essentially nullifies a lot of the use cases for a stablecoin token. Mostly who can touch it, what they can do with it. So a lot of the large value that's derived from stablecoins, meaning their settlement instruments, their payment instruments, they're basically utility for movement of capital in various ways, becomes invalid through that framework. And, if I were to use my magic wand, one of the issue there is the constitutional issue where the federal government can't really tell provinces what to do, right? So, maybe I would make that go away for a day until this legislation is in place, and then kind of move forward. There's also a huge aspect in the current framing where, there's drafting around the yield aspect of a stable coin. And, that goes back to the competitiveness of Canada versus, global markets. Now, you don't necessarily want people to treat a stable coin like an investment because that becomes then a security or another type of product. But you have to be able to incentivize people to hold your token if you want to be competitive globally. So as an example, Canada pushes or punches above its weight as a reserve currency, specifically the Canadian dollar, while people that are holding that in their reserves are able to invest that Canadian dollar and get a yield on it. Now, if you adhere to the vision that over time, maybe those reserves get transferred to stable coins because of usability and fungibility and liquidity mechanism, then you need to be able to generate a return on your stable coin if you're going to use it as a reserve asset. So that's another piece of the current framework that I think needs to be explored a little bit further and potentially drafted a little bit sharper. And the final piece, which I think is potentially a large gap, is financial institutions generally are completely excluded from the act. So that means banks can issue tokens and call them security deposit tokens or something else, and they don't have to abide to any kind of framework by the Bank of Canada. And while, technically the banks have governance frameworks and rights as financial institutions, if you're going to call something a stable coin, I think everybody should be held to the same standard, specifically around the usability and the governance around it. So So those would be the three areas that I would use my wand to clarify.
Do you think the yield situation will clear up once the banks are making money on it?
Yeah, that's a great question. Potentially, and I do think Clarity Act in the US might open some construct and framework. For those that follow what's happening in the US, you've had Genius that touches stablecoin, but Clarity's touching everything else crypto related. And there's a lot of back and forth on Clarity Act currently because traditional financial institutions are fighting back through lobbying and through various levels of government. I think ultimately, like financial institutions will understand that this technology is incredibly beneficial to them and their retail users, and they'll find a way to enable it. And I also don't adhere that everybody's going to keep basically all their money into stable coins and the deposits are going to disappear. I give the example of my poor mother many times in public discourse, but she doesn't have a Web3 wallet, right? She's unlikely to move to a framework where all of her assets are kept in digital format between now and the next 10 to 15 years. And there's just a part of the market that's just never really going to buy in, and that's okay. At least that's our view. So I don't believe that this will disrupt deposits to the extent that the editorial pieces in some of the big publications make it seem.
Are you seeing in your conversations more or certain Canadian banks, I'd say, more aggressive towards this tech? I mean, when you follow the headlines, there's a new American bank every week talking about stablecoins or blockchain or something like that.
Mm-hmm.
But do you see the same type of, I guess, adoption or interest at an institutional level here in Canada?
Without kind of breaking any NDA or confidential information, I would say Canadian banks generally understand that they're behind the curve in this technology, and most of them are taking action to try to get on par. I wouldn't necessarily say to leapfrog and get to a place where they're bringing innovation, but certainly learn about the technology, learn about its use cases, figure out what their internal strategies are. Yes, that's moved tremendously, and I would say, having been in this space for a little over 4 years now, the pace as which they're coming in to learn has accelerated dramatically. For a lot of us that have sold either in the financial service space or technology to financial services companies for many, many years, and we have a lot of great people at Tetra that came from fintech backgrounds and servicing the banks for decades. All of the comments are impressed by the speed at which things are moving at the banks. Obviously, as well, Tetra announced a partnership with National Bank and ATB Financial. So there are some banks that are taking more formal action and not just setting up, let's say, center of expertise or research team or enabling enterprise strategy to come in. They're actually putting dollars and investing in the space. And that's the best way to learn. I mean, we have a lot of conversations where we say, just get started, right? Create Web3 wallets, enable basically send, receive for stable coins and other asset. Learn what it takes to properly govern a system, understand the key players. Like, take action, I think, is an important message. And we are seeing some that are doing it.
Do you think the days of being unbanked from a policy perspective from the banks is coming to an end then?
That's a great question, and
and I'm mentioning this in a legal context, not for outside of that.
Yeah, I would say for people close to the space, the unbanking has been happening, but I can tell you, I mean, I have a personal story in my family around like somebody getting unbanked, unrelated to crypto. Right, so the financial institutions have been doing this for years. Crypto, there's just an acceleration, I would say, in the U.S. and in Canada. I know people that have gotten notices in the last few weeks from big 5 banks in Canada that are shutting down their accounts or their business accounts. So unfortunately, I don't think that is necessarily there, but we are seeing progress on some of the conversation with some of the risk teams at some of the large financial institutions, essentially trying to understand the technology better, which is a first step to try to change the risk framework. Because right now, crypto is treated like cannabis, like, gambling, adult content. We're essentially way up the risk curve, and that makes it very difficult for financial institutions to touch any kind of businesses or players in the space.
And so for just coming back a little bit to the sort of regulation landscape, is there a particular province that you think is either much further ahead or kind of has it mostly figured out versus some of the others?
Yeah, we've been based in Alberta since 2019, right? So Alberta has always had a willingness to work with this space and allow players to come in. When we went looking for a framework to register Tetra Trust, we went around many provinces, and there was very little appetite to either register us as a provincial trust company, or some of the provinces like Ontario no longer have the legislation framework to be able to issue provincial trust licenses. Everything's done at the federal level. So Alberta, I would say, has been at the forefront of this technology for quite a few years, and they continue to want to work with innovators. They have a sandbox that's being, heavily utilized. I would say BC, Quebec are also, pretty forward thinking in their capacity to regulate the space, and some of the players are based out of there. Ontario, though, has a good amount of the market share when it comes to registered platforms. Makes a lot of sense because this is where the market is to some degree on financial services. And right now, I would say there's some regulators that are pretty proactive and innovative, and then there are some that are, continue to think that Web3 is just a trend and it's not going to stick, and we need to overly regulate and extend beyond our mandate, and that's unfortunate, but we do believe that will change.
Okay, I've been hearing the same things, and it does seem to be very fractured between the different groups. And I guess being in Alberta, maybe is that how it helped you to kind of raise this year for stablecoins and kind of get those banking relationships?
Yeah, no doubt. The willingness from the Alberta government, again, to work with us as a player, but also the industry in the space. There was a good amount of engagement that we did with Premier Smith and her ministers. Minister Glubish is a great example of an innovator, forward thinker, and there's definitely a good amount of appetite there. And also companies that invested in Tetra recognize the power of the Alberta framework. I would say it's probably also not a coincidence that we have one of the institutions in Alberta that's backing us, and that National Bank also just completed a Canadian Western Bank acquisition and established a fairly big footprint on the Alberta market. Alberta has been trying to grow its technology pockets for quite a few years, right? Create a lot of incentive. When you look at the cost of real estate and lifestyle in cities like Montreal and Toronto, Calgary is very competitive for young talent. So there's a lot of really promising aspects coming out of Alberta. Ultimately, Canada, the regulatory regime is heavily fragmented, right? And we need alignment. If we're going to create competitive global products, we can't try to satisfy 12 securities regulators, right? That all have a slightly different view on a product, plus SROs or self-regulating organizations, plus federal regulatory bodies. I think the count is in the 20s amount of regulators you might want to satisfy depending on where you operate in Canada and financial services. that's just not competitive. And I think that's something that our current federal government should take a hard look at.
Yeah, it's definitely going to affect the ability to innovate, I would say.
Yeah.
I just recall reading from the investment round of who you've raised from, and thought maybe you could, as a founder, maybe speak to what it's like trying to raise from Shopify and Wealthsimple. Those are some pretty big, I would just call them corporate venture tickets to get.
Yeah. Well, I don't have any hair anymore. But all kidding aside, we were talking earlier about fundraising and generally how the market has evolved. I've been fundraising since 2022, and I would say even those few years have changed a lot of what you need to do to be able to land a Wealthsimple or Shopify or first you need to demonstrate you need to first build relationships with those investors, and that can come in various ways. But having a relationship that's built through either a common vision on products or innovation or through market segments, I think is gets you there a lot quicker. Then it's the quality of your information that you have internally and the people they can face, because it's great if Wealthsimple comes and interacts with Didier, but at the end of the day, they also want to evaluate the type of talent you have within your organization. So being able to present kind of what's going on in the company and the quality of the financial, the reporting, the documentation, the standard at which you operate plays a big role. And I would say that's probably why the first couple of checks in the history of a company comes from venture, comes from organizations that might be willing to take more risk on specific ideas because you have less of those frameworks. But as companies evolve and mature, then all of these are part of the due diligence. But ultimately, it's I go back to the relationship angle for me. Tetra is unique in the way that most of our capital we've raised is through partners. It's through companies that will utilize our infrastructure or our products as opposed to just venture capital. I think we're very proud of that. And that's happened through the cultivation of a relationship and also having, building a really strong track record in the space.
So kind of just going a little bit back to the we'll say the DeFi market. And I don't know if you can speak to this or not, but is there, from your conversations on the B2B side with institutionals, is there any particular thing related to this space that's top of mind from them that you're hearing them discuss or bring up or asking a lot of questions about frequently?
From a DeFi perspective?
Yeah.
Well, I think there's two things. So if you look at decentralized finance, the very nature of decentralized makes institutions uncomfortable. Institutions are used to having a framework where they know who they're facing as a counterparty and they can due diligence that counterparty, whether it be through AML, KYC, or kind of know who you're dealing with. The fact that you can go swap a stablecoin in a decentralized liquidity pool and there's no single agent that's essentially in control of that pool, I think that scares institutions to some degree. And if I look at what I believe some of the trends for the space will be, is as more institutions enter, you will start seeing fragmentation of this technology. You'll see more centralized pockets, whether it be through centralized exchanges like Coinbase, which operate in Web3, but they're very much centralized, and through, I would say, uncentralized liquidity pool. And I'll use like Aave as an example, or 1inch. But even Aave is getting regulated in the UK. So they can have somebody that's going to face them, right? Or they can have an institutional front so they can work with institutions. So I think that kind of narrative of DeFi is separating or fragmenting, and then you'll have people that are just going to go like really, really DeFi, right? So, not controlled entities, completely offshore. You don't really know who's interacted in the pool. And I don't believe institutions will participate there.
Mm. So like some of the things that you've kind of mentioned with the banks, or that we've discussed, being unbanked or being able to, move your money as you wish. It kind of seems like maybe the exchange's natural evolution is to be a bank. And so what are your thoughts on that?
I think the concept of a bank will change heavily over the next few years. And I'll give you a domestic example, and I'll give you kind of a US example. So starting with the US, you can now hold, balances on Coinbase and get paid for those balances. You can pay with your Coinbase wallet, at various online checkout platforms. You can now get a Coinbase credit card for regular payment that pays you back into crypto. So, and they've also applied for a banking license recently. So there is a generation of younger Gen Zs that are coming up and essentially, don't see the banks or the traditional services in the same way, because they can hold crypto, they can hold stables, they can make and pay, they can do transactions, they can pay friends, they can get a credit card. The analogy in Canada would call it, probably the best one would be Wealthsimple, where, within your app now you can hold accounts and balances, you can get a credit card, you can transact crypto or digital assets, you can invest. But it's not a bank, it's a financial technology company, right? So again, different representation. And of course, they're regulated in different ways and in the right ways in Canada as well to provide those services. But I think the concept of walking up to a branch to, deposit $20 or a check that your grandmother gave you because she doesn't know how to do a transfer, I think over time those services will become more online, and those traditional banking services will disappear.
Okay. So from sort of the technology that is underlying all this Web3 and DeFi, what do you see as kind of some of the core bottlenecks to mainstream adoption? So outside of regulation, as we've already discussed.
So, well, first, I'm a strong believer that there's just way too many blockchains. I mean, there's, hundreds, and everybody seems to be starting blockchains with some new level of functionality. But as an institutional player in the space, I can tell you that people care about maybe a handful or two of chains, right? And that the tail is not as important, specifically for building infrastructure on top of it. I don't think it's a surprise that you're seeing most of the volumes coming up on stablecoins to be, on Ethereum layer 2s, right? So, like the Bases and the Optimisms. And, I don't think it's surprising that Solana is being heavily used by developers because of its speed of transaction. So as blockchains get developed, there's more players that are coming in with better tooling, but the existing chains are also changing themselves to make usability more friendly or better, depending on the metrics you're looking at. So I do believe that one of the things is we just have too many blockchains that people are building on, and that does a disfavor to the institutional space. And over time, I believe you'll see a high concentration of where people are building.
So if you were somebody new getting into this space, building, like, what areas excite you? Where do you think they should be looking for what's next, maybe?
Yeah, I think so. Stablecoins have been the rage for the last 18 months or so. although they have existed obviously for a decade. But there's a lot of excitement around what's being built around it. So usability, transaction payments, the various kind of wallet technologies. You saw some deals being done recently. Fortify was recently purchased. So that's the today excitement. I think if you are somebody that's looking to get into the space and wants some predictability for the last couple of years, it's the tokenization of everything. People have been talking about tokenization. There's some very aggressive projections in terms of things going on chain, but I think the direction that everything we touch is becoming digital in some way, shape, or form, and a lot of it will end up converting on a blockchain in some way, shape, or form, I think is a very strong area to be focused on. So tokenization of financial assets, right? Like securities, real estate, things like gold and precious metals or other types of instruments. But then digital ID. I mean, we were talking earlier, you're mentioning that you go to Brazil a good amount. Like Brazil has done incredible things on the financial innovation side, including being able to provide ID to each individuals from a financial system perspective. So they can transact securely depending on the platforms they're on. India has similar concepts around digital IDs as well, where people can passport their ID, through various platforms. So I think there's going to be a lot of innovation that's going to come in the space, and some of it's going to be on the token side, and some of it is going to be on, the digital ID side of things as well, which I think is super exciting.
But the tokenized side, if we're talking like real world assets, whether it's an IP or a building or something like that, does that fit into the Tetra Trust custody offering as well? Like, are you able to take those kinds of things and use it within your platform for businesses, or is that just something down the line?
No, we can. If you think about the concept of crypto, as any kind of token requires a wallet or a custodian to hold it, it does very much play into what we do, specifically on the business side, right? So I'm not suggesting that Tetra would be used, let's say, down the road to hold people's identifications, but hundreds of millions of real estate through tokens, yeah, that makes a lot of sense, right? Or securities, for example, in the traditional world today, the CDS or DTCC in the US holds those securities, right? So the same would apply in a tokenized world vision where you would need somebody to hold those tokenized securities. So I do think there's certainly some strong parallel there.
And so I suppose potentially maybe the identification might solve the KYC issue for banks.
Yeah, it's an interesting point. So there's a company in the US called Persona that does a lot of the KYC and AML work with some of the digital asset companies. And what's really interesting about crypto is they tend to be way ahead on the technology, security, and identification than traditional financial services. So I remember things that I was doing in crypto 3 years ago in terms of taking pictures of your ID and moving your face in front of a screen that now the banks are starting to enable. So a lot of that innovation actually comes from the digital asset world. Now, Persona is developing a passporting token. So if somebody's been identified on Persona and basically has gone through all the checks, you get issue a non-fungible token, which means that it's your ID, it's your token, and then that token essentially can be passported through different applications, which confirms your AML KYC. So I think that's potentially the future, right? The same concept of like a universal credential for you to be able to access multiple services. That same concept in AML KYC is being tested, I would say, right now, which opens the door for a lot of like really interesting innovation, but B also opens the door for a lot more cyber risk and all sorts of other risks that platforms will have to consider.
But potentially we may never need to renew a passport again.
Potentially, but that's going to go through biometrics, and it depends how people are comfortable with that. I would say also world ID, right? And, the world token and project that's backed by Sam Altman's an interesting one. So you get your iris scan, and then you are verified as a human, and you can passport through the applications. There is right now opinions and visions that it's going to be very hard to figure out what's going to be real and not real through the internet, and what's going to be a bot versus a human. So we're going to have to figure out some ways of identifying people.
Oh yeah, when you're just looking at content creation statistics, that's that you don't know what's that's out there. But I guess there's always kind of the pull between anonymity and transparency.
Yeah.
And depending on what we're talking about, that seems to always be the pull. So just bringing it back to Canada, do you think we have an edge in this space?
I certainly do. I mean, Canada has had amazing leaders. The example that everybody gives all the time is Ethereum was founded in Canada. But, I can think of many companies or many individual contributors that are Canadian that are now working abroad, or companies that have left the country, generally speaking, because it's been difficult to build here. We have fantastic university. We have deep expertise in the space. I mean, Waterloo's been very, very involved in digital assets for, over a decade now. It's famously where Ethereum's coming out of. But a lot of talent end up working internationally or leaving just because of the frameworks are difficult to work through in Canada. So, as a proud Canadian, we decided to build a company here. We decided to launch a Canadian stablecoin. We want to enable Canadian competitiveness globally. Like, we care deeply about this. But then I go and I have to fight where, well, is a stablecoin a security or is it a payment instrument? Somebody says one, somebody says no. And we got to invest, all this amount of energy and focus, where if you're building in Dubai, they've already told you, no, this is, payments instrument, and go ahead and just build, right? And focus your energy on that. So Canada has great talent. I think Canada needs a change in mindset. There's a lot of really great things that are coming out currently from a sovereignty perspective. So there's various organizations like CCI that are, Canadian innovation focused. Build Canada is another great example. That non-for-profit, and they're doing a lot of focus groups and thought leadership, and really pushing on regulatory regimes and innovation. And then the other important pillar is our government is also talking about a lot more innovation, specifically in financial services, which is also really important, because if you get that clarity from the top of the house, then you can start pushing more. So we have great talent. We have struggled to keep it, but I am confident that things are moving in the right direction.
Okay, so still stay here, still build. It's just going to be harder, so the payout might be better.
Correct.
So we're going to move to the kind of the last part of the podcasts, where I just ask you, general questions. The first is, are you reading anything or listening to anything interesting at the moment? Whether it's a podcast or a book, it doesn't matter.
I love podcasts, so I listen to a ton. I would say I'm the typical tech bro, if I can, because I do listen to All In almost religiously, although it's not as good as it used to be. But actually, a podcast that I really like is Founders by David Senra. So his entire podcast is basically biographies of founders. He goes really deep into specific founders, and recently has pivoted to do interviews with people that are alive. So he's done one with Brad Jacobs. He's done one with Michael Dell. On my way here, I was listening to James Dyson. So I think that's excellent. That's like a must listen to me every time something comes out. On the reading side, I read a lot of biographies of various founders, innovators, leaders, a lot of history. So I'm very kind of nonfiction focused. Um, I think the title of the book will not resonate, or maybe it will. But Brad Jacobs, who's built $7 billion companies, recently published a book, which I'm reading at the moment. I think it's excellent for leaders or young funders or people that want to get into business, because he basically has decades of advice, and the guy's gone on to had an incredible career. So his book, which is How to Make a Few $1 Billion, that's the title, is a really great read.
And your travel schedule is pretty intense these days, you mentioned. You're all over the place. So this is like a two-part question. So what is your health hack that you do to kind of like keep it together, as well as what productivity tool can you not live with?
Yeah, I think the health hack piece is try to move in some way, shape, or form every day. And sometimes when it's on the road or you're in a different type zone, it can be a little bit harder. But I think the eating well and trying to move every day are the two hacks. And I'm big on sleep. There's different leaders that do different things. When you look at sleep, some people sometimes wear like a badge of honor. I've slept 4 hours last night or didn't sleep, but I'm at my most productive when I've been, call it, in bed for 8 hours, and that's not something I'm ashamed of. So getting good sleep, I think, is important even on the road, trying to maintain that same schedule. Productivity hack, that's a good question. I think for me is I work with our team at Tetra to establish different levels of communication based on urgency and focus for me. And they know where to send a message depending on how urgent it is and whether or not, I need to look at it right away, or if it's just answer a simple question or something that I can file and look at later. And that's been very productive for me, because in a world where there's constant communication coming from all challenges, all levels, it's very hard to know where to spend your focus. So not a lot of people have my cell phone, and not a lot of people text me. And when there's, let's say, a service provider or somebody in business that starts texting me, I tend to push them out of text and into, let's say, email or Slack. Because they don't need to be texting me to update me on a file, right? It's not that level of urgency. I want to, if somebody's texting me, it's because it's important. So it's not a tool per se, it's a system. And that's helped me kind of manage my personal life and my professional life.
Yeah, nice. And then the last one is, looking back on your experience, what advice would you offer your younger self or an aspiring entrepreneur?
I'm working a lot on this right now, and I would say is take better care of yourself. Because ultimately, if you're a founder, a leader, a CEO in a business, everything derives from you. Some people call it like the weather is how you show up every day, right? But sometimes it's hard to be in the trenches. There's a lot coming at you. You tend to multitask, do context switching constantly, and that can wear you out pretty aggressively. And been working a lot on, if I take better care of myself, then everything around me just benefits from that health. So optimize for yourself first, and I think that's counterintuitive. Because a lot of people will just go all in and try to build and grind. And I'm not saying don't grind, but I'm saying, make sure that you're doing it within the parameters where you're your optimal self. So that would be my advice. And that's done wonders for me in the last few months. And it allows me to maintain a high level of pace. Whereas before you go through these burnout cycles, right? Where you're performing very high for a moment, then you're not performing at all for a moment, and that's just not an optimal way of operating.
Yeah, that's great. Burnout in this industry is not low. Well, for anybody who wants to learn more about Tetra Trust Group, Digital Group, and your other entities under it, where should they follow you or look to find more information?
Yeah, you can find us on tetradg.com. We have all our products there. We're pretty active on LinkedIn as well. So Tetra Digital Group, or you can follow myself, Didier Lavallée. We are somewhat available on X as well. But I would say between LinkedIn and our website, you'll get the majority of what's going on with the company.
Yeah, that's great. Well, thanks for coming and doing this and sharing your insights on the industry and the market.
Great. Thanks for having me.
Great.
You can find information about the Candid Capital podcast on the website, LinkedIn, and Twitter. Episodes can be found on Spotify and other podcast platforms. A quick reminder that this is infotainment and is not intended to be professional advice, malicious, or hateful. The views, information, or opinions expressed during the podcast are solely those of the individuals involved and do not represent those of employers, partners, and their subsequent connected private and public associations or organizations.
We canned it, I hope you understand it. Your business growth, we planned it, yeah. This ain't for show, we stamped it, yeah. No FOMO, everyone come join, no solo. This all factual, from me to you, this Candid Capital.